So we have a chart. I don't have anything on it yet, but I'll just put a moving average on it so we can see a little bit more. Okay, so one thing, we're just going to go through a few things that you could do to help an EA out. I mean, the more trading knowledge you have, the more you could sort of help it make a few better decisions. If you're a really good trader, then you probably don't need me to explain what you can do. And if you don't know anything at all, it's best you don't touch it at all. But if you're someone in the middle, this might be helpful. Let's say that trend trade. Let's say this trend had just started going up. It's not quite, but let's say trend trader takes out a buy order here, and the stop loss that trend trader puts in is about there. All right. What you could do to help it is you could then move the stop loss a little bit further down, simply because that would take it below this low point, below this structure, possibly even go, you know, below the structure over here. You know, so for me, if I had a buy order here, depends on what time frame I'm running on and everything, but potentially having the stop loss here is a lot less likely to get hit than if I had it here, for sure. You know, so it's up to you. If you move it from here down to here, you're basically, you know, you're probably doubling the potential loss. So you're increasing your risk, but it is much less likely to get hit here than it is here, because you're below this low point. So you're below support here, you're below support here. You know, you can see that the market's, you know, for what have we got? Each little line here is these little vertical lines as the start of one day. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So it's been over 2 weeks before the market's been this low. And, you know, the market has been a lot higher. So, you know, I would think that would potentially be worth the risk to move the stop loss down that far. So that's just one little thing like that. Another thing I guess you could do is, if we'll go to the same scenario, if the trend trader took out a buy here and it put the stop loss here, and, you know, you might not be watching it, and, you know, the market might do this, might come down to there. So, you know, it's come down, it's hit the stop loss, but then the market sort of bounced off that support. It might sort of bounced off it twice, and then it started doing an uptrend. You know, that, or whatever you might know about trading that's giving you the indication that it's really found support and that it is starting to bounce up. Then, you know, you might have decided, if you didn't move that stop loss down, you might decide to place a manual trade there and take it up and make up for the loss. You could do that also. I'm just trying to think of all the things I was thinking of before now.
Where I was often wanting to and should have quite a few times was when we're seeing it go up. Say you're in a trade. Hang on. Say you're in a trade there where Les has drawn that blue line and it's opened up and it's coming up and it's hitting up here.
You're drawing your own line.
Where there's price there. And I say there's a bit more price action back up here, and you see this start to turn. you may want to lock in profit here, because I have had quite a lot of times come back and hit our first profit lock, which is way down here, and I've missed out on all that profit.
Thanks. You just reminded me of what I was going to say now. So, yeah, so what I was talking about here, that was sort of moving your stop loss down to suit structure. What Des is talking about is locking in profit because the market's getting to support above, you know, so resistor, whatever you want to call it, but you're getting to the structure above, which may mean the market may struggle to get above there. So this is what I do. You could just, if you saw the market get to here and you're in good profit, you might have your second profit lock in here or something, but yeah, that might be an extra 1% there that you don't want to lose in case it retraces. You could just close that out there. What I personally prefer to do is just to grab this stop loss and just drag it,
Move it up,
drag it right up to there,
It's where you're happy with.
up to there or something, trying to give it enough room to hopefully just power up. But if it doesn't, I'm not going to lose too much. I may even, at this point, put a trail, add an extra, not through the software, but just add a manual trailing stop loss to the trade as well, so that the market, as the market moves up, it's going to keep that stop loss closer. So you're never going to risk too much, potential profit. It's all going to depend on, really depend on how much you know about trading and, what Des would have done if he was thinking about doing that. He would have wanted to have a little bit of a look back further. Hang on, I need to stop.
And have a look on different time frames, see where the high time frame trend is sort of heading.
So jump on here and have a look. And if we have a look here, if I draw a line at the top of this structure here, look at that, right on the money there.
Yeah, good chance it's going to be.
That's whatever you'd like to call it, but that's pretty good resistance there. It's going to, because it's bounced off it significantly twice on the higher time frame. There's a pretty good chance that when the market does get up to here, it's going to come down a bit. It may then break through, but it could very well bounce off there for a while. So it would, in that case, because it's bounced here as well, it would be a very good idea, I would say, to take profit here, or to at least keep a tighter trailing stop loss on it.
I look at it and think, am I happy with the profit that I've got there now? And would I be pissed if I turned around and only took a very small partial? And if the answer is yes, I would be pissed, then I'll move the stop loss up close to it.
I will issue a warning on that though. The settings we're using are based off 100% based off those back testing results, and those back testing results to be as they are do require
letting it play.
Some trades going right through to take profit. So what the software does is, so that's your well, let's just say how this is. That's it. That's your buy order. That's where the stop loss goes, and this is your take profit here. That would be perfect if it did that. But we get, we'll just make a rough example, and this is pretty accurate on some pairs. We're going over the course of about 3 months. We might have 6 trades hit the stop loss. So let's say there's 30 trades in 3 months. These are roughly the percentages. We'd have 6 hit the stop loss, and we might have 5 or 6 or 7 hit the full take profit, or it might even be a couple less, and then the majority will either just hit profit lock 1 or profit lock 2. So quite often the losses, the stop losses that get hit, balance out the take profits that get hit, and the actual clear profit we make is just from those small profits as we go along. So if you do stop the software hitting some full take profits, especially on those pairs with a high risk to reward, then you're really throwing the averages from that back testing out the window. That's why once you do a lot of back testing, you realise that you end up with that this here would be your first profit lock, and this here would be your second profit lock, and you would think it would be good to have a third profit lock here or a trailing stop loss filling this gap in, but based off those back testing results, it doesn't work out good to do that. Once the market, if the market gets through those profit locks, retraces and keeps going without hitting it, then it's sort of in the clear and in a good uptrend, and the market can keep doing this all the way up. Whereas if you have a third profit lock or a trailing stop loss, every time the market has that little retracement, it's likely to get hit. And then you miss out on that trend continuing up like I just did. And I was bobbing my head as I went. You can't see that. So, I mean, it's always good to take profit. Just have to keep in mind those averages, which is what we've based the settings off.
And you can be sure that every time you take profit yourself, it's going to turn around and keep going, and vice versa. When you don't, it's going to come back and hit. It's just what happens.
Now, all the results that I share of my own trend trader, it's all just letting trend trader do it. I mean, I do have one account that I play with a bit as well, but it's not particularly doing any better than the others. But so the results I share are just trend trader results. But other things you could do. I just remembered the main thing I wanted to tell you is that you could do. Hang on. Just one more thing first. With the multiple trades, if you got one trade open and the second trade open, let me get rid of these trades first so I can draw them in again. Generally, when you get more than one trade open on one pair, it's because there's been extra confirmation that that trend is continuing. So if it took out, all right, so this is our moving average. So that's the trend going up here. Let's say the market was trending up, it got a retracement and continuation, so it might take out a trade there. And then the market, took out a trade here. And then the market came up, it went down and it continued up again. So it might take out a second trade there because that uptrend is still continuing. The third trade would get taken out. We've got it come up. That might be a big enough pullback, and then it might take out another trade there. So based off this structure, that is potentially where trend trader would take out the trades. And if you can see, it's done that because, like it took out one trade, but then it got a pullback and continuation. That trend's continuing up. So it took a second trade and then it looked like it was doing again. So it took out another one. But then the market's come all the way back and all three trades are in drawdown now, not a lot, but drawdown. This is where people get scared. And I know one person specifically last week that got scared in this exact position, only two trades open. So he closed them both out. And then exactly this happened. The market skyrocketed up here and would have almost hit take profit. So this is what I would call a pretty good uptrend, It just faltered here a little bit, I guess, and the trades went into drawdown, but then it continued right up. And three trades all the way up to here would have been, you know, a really good profit. That's 3 trades going that far up. Well, how far is that? Even from that last trade right up to there is 280 pips on US yen. Take profits only about, you know, here. So that structure, that setup just there is enough to make the whole week, you know, just to get that once. So I know it gets scary when you got, you know, you get one trade open, it goes into drawdown, you get a second one, they both go into profit, you get a third one, they're all in profit, and now they're all in drawdown. That's where you just got to let the software do its thing, really.
And not have your risk too high.
So easily miss out on that big profit just because it just went momentarily into a bit of drawdown. Okay, so what I wanted to go through, so the software is looking at, you know, the 4 hour, the 1 hour, and the 15 minutes. So all 3 need to line up. We all sort of understand that. And the software is called Trend Trader. So strangely enough, if the market trends in one direction, it's much better than if it ranges. Ranging is not so good for it. So if you're like me and you got it on 10 or 12 pairs, you can just leave it and let it do its thing. But sometimes the market's ranging and it's not necessarily a good trend. So what you could do at the start of the week is you could, so we're on US yen, we could have a look. Okay, like I'm pretty happy. That's a decent uptrend on the 4 hour. I'll have a look on the 1 hour. Okay, that it's just dropped on the 1 hour, but it's starting to come up. I don't care about the 15 minute too much because it's designed to handle the 15 minute going against it. But more importantly, the 4 hour, that's in an uptrend. So I'm happy to, you know, it's been a steep downtrend. It's a decent uptrend on the 1 hour. You know, it was a steep uptrend. It's a nice steep downtrend, as opposed to something like this where it's just it's a downtrend, but it's only very gradual. It wouldn't take much movement in the market to change this from a downtrend to an uptrend, as we just see here. So this pair, I'd be happy to run Trend Trader on it. Well, I'm usually happy to run it anytime, but yeah, that would be a good one to run it on because it's trending steeply in all directions. If we brought up another one, a different chart, I'll just pick one.
Just reversed.
I better put this on it for us so we can talk about it. So on the 4 hour, yeah, it's been steep. Not that this matters because that was last week, but it was a steep uptrend. But now it's sort of going sideways here at the moment on the moving average. But it's possibly starting to go down if you just take a rough guess. So this one here, not the best setup because you don't know whether it's going to keep going sideways or up or down. You just don't know what it's doing at the moment. And on the 1 hour though, it's shooting down quite well, but also it could be changing. So the US 30, I would say it's not too bad, but it wouldn't be my as good a pick as the US yen to trade. What else have we got? So on the 4 hour, it's been a decent uptrend, which is still continuing, although it's starting to reach a bit of resistance sort of thing here. So it could go down. You could just zoom in and see what it's done previously. Could still potentially go up a long way. And on the 1 hour, it's not, the trends have only been short-lived, so I don't particularly like that. for the longer longer the market can trade in a trend in one direction, the better. It's just when the market's trending up. Let's say the market's trending up here. So trend trader takes out a buy here. Well, let's go over here. The market's trending up, still trending up. So trend trader takes out a buy here, and then it wobbles down. So it's only, it's trending down for 2 days, trending up for 2 days, sideways for 1 day. So it's just 2-day trends, 2 days down, 2 days up. It might be sort of three days there, but I would much prefer it to trend in one direction all week. That way you're almost guaranteed of it taking profit for you. Have a look at one more. So this one's trending up strong there on the 1 hour. That's fine. On the 4 hour, still a nice strong trend up. So this one's a really good one. Everything's just, this one's been trending for 1, 2, 3, 4, 5 days trending up, and then it was, a couple of days sideways, and now it's going up again. So this one's trending for much longer before it turns around each time. We can backtrack more and see here. So from here, 1, 2, 3, 4, 5 days of trending down, 5 days of trending up, which is much preferable to Euro US, which was just 2 days down and 2 days up. Does that make sense?
Are you saying that you would perhaps turn some of those pairs off?
That was my point. I haven't been, but that's what I sort of wanted to talk about tonight. And I forgot about it until you've reminded me. But so have a look, because the markets are always constantly changing. I mean, we do the back testing to try and get a good, to find settings that sort of suit an average of what's happened over those last 3 to 6 months. But, even from, 1 month to the next or 1 week to the next, things can be different. But historically, this one here, and I don't know what's happened before this, but that's 1, 2, 3, at least 4 days of trending up. And then we've got 3 down, then we've got 4 up, and we've got 5 down and 4 up. So that's 4 or 5 days up. That's your whole week of trading. So if trend trader takes out a buy order here, there's a pretty good chance it's going to hit a take profit because it's trending up for 5 days. I mean, even if it doesn't get around to taking out a trade till Wednesday, you got another full 2 days to try and find take profit. Whereas if you're on Euro US here and it takes out a sell order here, you've only got 1 more day of sell of downtrend to try and reach your take profit before it turns around again. So you're not getting as much trending. Obviously, some software suit trending markets, some strategies suit trending markets, some suit ranging markets. Trend trader is a trending market. So if you can find pairs that have been recently trending further in one direction before turning, then that's going to be preferable. So you can quickly flick through all your pairs, and you can go, you don't do much analysis. You can just go, look, that's 5 and 6 days trending. That's awesome. That's a good one. I'll leave it on. This one's sort of basically ranging. We'll turn it off for this week. Let's check this one out. Okay, this one's it's in the middle. I'll keep that one. Leave it on. Check the next one. You might not have to do anything too technical, but if you can just, you might only have like 2 pairs that are really ranging, so you leave them off for the week, and then reevaluate again at the start of the next week. I mean, you can reevaluate halfway through the week. Depends on how much time you want to put into it. I mean, I've been trying to, and I'll continue to try and add a bit more to it to make it as profitable and as hands-free as we can, which is why I haven't sort of mentioned any of this before, but these are the sort of little things you can do yourself. If you want to do any more than what we've just talked about here now, you probably should just stick with manual trading. Well, I'm not saying just stick with manual trading, but do your own manual trading and then let trend trader do its thing. Because if you've got to do too much to help out an EA, it sort of defeats the purpose of having an EA. So yeah, help it a bit for sure, particularly, if you lose a few percent on your prop account, you just got to make it back quickly on a bit of Bitcoin. That's fine.
I could have passed it in one day.
And Liz, with the trailing stop on,
Yep.
on Trend Trader,
Yeah.
will that work if you're not on a VPS and you shut your computer down or not?
No,
It won't work.
no, because Trend Trader's turned off, so it can't do anything.
So it's not setting it at the exchange when you set the trade.
No, no.
Okay.
You can't send a trailing stop loss to the markets like what you're thinking about. You can have a take profit and stop loss put in place, but a trailing stop loss is either being activated by the EA, or even if you place a manual trailing stop, it's still just being activated by the MT4 platform itself.
Yeah, but the manually one or the manual ones will still work if I turn my computer off.
Do they?
Yeah.
Once it's set in motion, it should stay in motion, doesn't it?
Yeah, I
But
thought that
the one
Trend Trader
with-
would set it the same way that we do, but just
No, well, Trend Trader's just it's doing all the work. So if you turn it off, it can't do it. No.
okay.
If it's not displayed on the screen, then it's not doing anything. So it does display the take profit and stop loss. So they continue to work if you shut it down. But essentially, if you're using Trend Trader and you're not running it on a VPS, that's just silly. If you don't mind being silly and you just got it on your own, then you need to leave your computer on 24/7. Otherwise, there's no point having an EA if you're leaving it turned off most of the time.
Yeah, no, I've got a VPS, but
Yeah,
I was just asking the question.
making the point for anyone that might be listening or watching a preview or replay.
Mhm.
So I'm not sure who's seen this yet, but I have been playing with another EA that I sort of made ages ago as well to start with, called Cost Averager. It's as unlike Trend Trade as it could possibly be, really. It's not a martingale strategy, but it will open up multiple trades to cost average into position. It needs all three timeframes to line up like Trend Trader, and it always trades with the trend. But because it can open up multiple trades, it can, potentially get you into more drawdown. I'll just show you how it works while we're here talking. So it's got the three timeframes as well, the three trends that need to line up. And I've also put in the time parameters on it. I will eventually turn that into a full-blown news filter, but for the moment, I'm just sort of blotting out on UF30 anyway. I'm just blotting out sort of from 10 o'clock my time at night through until 1 or 2 o'clock in the morning, which covers the 10:30 period when most of the major new red folder events occur, and the 11:30 UF30 open. It blots out that whole section, which is when most of the losses were occurring. But we'll just wait for that. So see, as soon as that turned green, we got a few trades come in. Trends are lined up, so it's opening up trades. Close them all out at profit. Now we're just in that not correct time, back into correct time, waiting for the trends to line up. And it's only aiming for little tiny profits. So every time it closes out the trade, I think it's $10 or $15 profit. But we can go through it a bit quicker. That's just to see how it works. But We'll turn off that display and we'll just see, this is that usual 3.25 months time period. This is where me and Des were playing earlier. This is only a $1,000 account. And we've got the settings dialed up a fair bit. So it's,
Call it the dome trader.
yeah, that's what we could call it. So those little domes, that's when it's opened up multiple trades like it just did here, and then closed them out as a group. Because half of them get closed out in loss, the other half in profit, but a total group profit there. So in 3.25 months, we took a $1,000 account up to about 3,500. So we made 243% profit, but we incurred 35% drawdown. So this is higher risk than I would run it, but still potentially pretty nice. How I was normally
It's not
doing
suitable
it,
for prop accounts.
well, no, it, I was running this on a $10,000 account like this, same settings. So if you've got a $10,000 account on these settings, we'll just let that fly by. So this will essentially never take, it's got like an equity protection feature. So it will never take a real loss unless it gets into enough drawdown to activate the equity protection. So not necessarily my favourite type of EA, but for a lot of people, they prefer it because you just very rarely take a loss. But when you do, it's a bigger one. That's the trade-off. So we've made 24% profit and incurred 7% drawdown. So that's over 7% per month, but 7% drawdown. So still a little high for prop accounts, but you can still tone down the settings a bit more and keep it under 5.
You dial it down to 4% equity protection. Keeping
we
it
could,
under the 5, you know.
Easiest way, we'll make it a $25,000 account. So the drawdown now will only end up being about 3%. But we'll only make 10 or 11% profit. But I think that's pretty fair. So $25,000 account, we made 2,474. So basically 10% profit and 3.3% drawdown. So, you know, as far as prop accounts go, that's fine. If you can, you know, that's
For
like,
the unlimited time, yeah, definitely.
yeah, you know, that's only 3.2% profit per month.
But if that's
you know,
a
you've kept the
100K account,
kept the drawdown more than adequate for that, depending on your prop account. But 3.3 is fine for all of them.
yeah.
So
Nothing
that
wrong with
works pretty good. I made most of this EA quite a few months ago, but I've only just learned enough about coding to implement a little feature in there, which will stop me adding a few more things to it. So that's what I've been doing this weekend. What did everybody else get up to over the weekend? That much. Cool. Nice.
Work.
Now that was my work. Catch you later, Nola.
I'm going to go and have a cigarette.
No worries. Well, I might turn off the recording myself and be almost time to start packing it up for the night.
All right, we'll see you later.
No
Yeah,
worries,
thank
mate.
you, Les.